Now, obviously, we had G20 a couple of weeks ago, and on the Monday following the G20, Australia and China signed a free trade agreement that had been in negotiation for a while. Yeah. And I was planning to talk about this at the time, but a few topics came up and we had too much to talk about. Yeah. But this is significant, so just bear with me, will you, Raja, while I read this out.
No worries.
The Australia-China free trade agreement. Now, as I said on the Monday, the day after G20 came to a close, Australia and China announced that they had finally reached terms on the so-called free trade agreement, which had been in negotiation for years. And I want to read out to you a quote from Trade Minister Andrew Robb's own press release. Quote, ChAFTA will promote further Chinese investment in Australia by raising the Foreign Investment Review Board screening threshold for private companies from China in non-sensitive areas from $248 million to over $1 billion. Consistent with the promise made by the coalition at the last election, the government will be able to screen investment proposals by private investors from China in agricultural lands valued from $15 million and agribusiness from $53 million. So that's end quote. That's from the Trade Minister's own press release. Now, the FIRB, the Foreign Investment Review Board, their so-called screening was already a joke. But now they've made it official that farms of up to $50 million can be purchased by Chinese investors without even token screening. You have to read this and think about it to get your head around it. A Chinese investor can now, according to this press release, as part of these free trade agreements, will be able to purchase an Australian farm of up to $50 million, no questions asked. If they've got the money, they've got the farm. Think about where that might lead. I'll continue on here. That's not even the worst part of the deal. Now, back in episode 3 of the Australian Roundtable podcast, we discussed the problems stemming from the proposed Trans-Pacific Partnership, the TPP, and in particular the harm that can be done to our national sovereignty by investor-state dispute settlement provisions, ISDS provisions. Now, the TPP hasn't been signed yet, but guess what made its way into the ChAFTA agreement? Again, this is from Rob's press release. Quote, ChAFTA will also contain an investor-state dispute settlement mechanism. This will enable Australians to invest in China with greater confidence. The ISDS provisions contain strong safeguards to protect the Australian government's ability to regulate in the public interest and pursue legitimate welfare objectives in areas such as health, safety and the environment. End quote. So it sounds harmless, doesn't it? He's basically saying we are giving Chinese companies the right to sue us in international tribunals for looking out for the interests of Australian citizens, but don't worry, we will continue to look out for the rights of Australian citizens. You can trust us. That's essentially what he's saying. Now, none of this seemed to get much coverage in the Australian press, in the general Australian press, but the almost unheard of Australian Financial Review, which is owned by Fairfax, who own The Age and the Sydney Morning Herald, and has a circulation of about 60,000 readers, had this to say, quote, Chinese investors will get almost unfettered access to Australian commercial real estate under new Foreign Investment Review Board rules that form part of the China-Australia Free Trade Agreement. Under ChAFTA, private Chinese investors will be able to buy commercial property up to a value of $1.078 billion, well above any commercial investment to date, without requiring FIRB approval, putting them on an even footing with US and New Zealand investors. The current commercial property screening threshold is just $54 million. End quote. Now, I said earlier that the FIRB are a joke. And of course, their job is supposed to be, someone's trying to invest in Australia, we're going to screen that to make sure it's in Australia's national interest. That's supposed to be their job. And I said they're a joke. Now, let me read to you a section from that same article. Quote, the FIRB did not block any foreign investment proposals in 2012-13 and just 13 real estate proposals in the previous year, end quote. So the FIRB was already doing practically nothing to stop Chinese money flooding into the Australian real estate market, and now the government has raised the thresholds pertaining to when the FIRB is even supposed to screen these kinds of investments. Now, to give some idea of how much Chinese money is flowing into Australian real estate, even before these changes were made, here is some information from an article from The Australian in October of this year. Quote, cashed up Chinese buyers have tripled their spending on Queensland real estate, farmland and commercial property since the global downturn, outlaying a record $462 million last financial year. The Chinese almost doubled their real estate spending in the Brisbane City Council area during 2013-14 to a record $185 million, up from $96 million the previous year, so almost double in the space of 1 year. China is now the biggest source of foreign investment in real estate in Queensland, the only state or territory to track purchases by offshore buyers. On the Gold Coast, where property prices plummeted during the GFC, Chinese buyers topped the list of foreign buyers by snapping up almost $200 million worth of property, 6% more than 2012-13. Chinese buyers almost doubled their expenditure in Brisbane to $185 million. End quote. So a couple of things that are important there. One, that the amount that they were spending even before these changes had doubled in the space of a year. But two, Queensland is the only state in Australia that even tracks the foreign purchases for us to know how much this is happening.
Yeah. Yeah.
Now, I'll go on. The same article notes that the Liberal government, that's the current government's own economics committee leader, has herself criticised the FIRB for not enforcing their own policies. Quote, the Federal Parliamentary Standing Committee on Economics is investigating whether foreign investment is fueling Australia's property prices. The head of the committee, Liberal MP Kelly O'Dwyer, has flagged imposing an application fee for offshore buyers to finance a Treasury crackdown on illegal purchases. She has criticised the FIRB for failing to enforce its restrictions on foreign buyers who are banned from buying established residential property. End quote. So, the government who just signed this free trade agreement and changed the rules regarding the FIRB screening process for these investments, the head of their own economics committee has said that the FIRB doesn't do enough. But it gets worse. I'll go on. If you need any more evidence that the FIRB are a joke, I found this little nugget from a separate news article. Quote, since 2008, the FIRB has not issued a single divestment order forcing investors who breach the rules to sell their assets. End quote. Now let's think this through. The regulations regarding foreign investment into Australian real estate were already lax, and the government themselves admitted that the FIRB weren't even enforcing those lax regulations or penalising people found to have breached the regulations. And the same government has just signed an FTA with China, which will further loosen those regulations when China happens to already be the biggest source of foreign investment into our already overheated real estate market. You can't make this shit up.
No.
Now, based on what you just heard from me, what are your thoughts on all of that?
Oh, well, there's a lot there to really, really swallow there, isn't it? And it's not good stuff, you know, it's not good food at all. Look, I haven't really sort of looked into that particular story with the free trade agreement with Australia, but I will say this: there was a documentary on ABC, the Australian Broadcasting Corporation. It would have been this time last year, and there was an issue that the farmers were having out somewhere up in North Queensland, a small town up there, and they had Chinese buyers. It was a massive parcel of land, and I think the outlay there was something along the lines of about a good 15, in between 15 20 mil. Big part is cattle grazing, and I think it was a bit of corn, vegetables and things like that. And what actually happened there was that the government allowed the Chinese buyers, when that land was up for sale, that they allowed the Chinese buyers first choice to go there and buy without any questions asked. Now, the issue that a lot of the local farmers had, was that why wasn't the offer made public? Why? So that some of their own farmers could have got together and possibly made use of that land, bought it up and made use of that land. But instead, it was done secretively. I can't remember, like I said, I can't remember the name of the actual area, but it was done, and it cost him between 15 and 20 million. It was purchased by Chinese buyers, investors, and that was that. And they were contesting it, and I don't think anything really got anywhere. But that would be very well related to what that article, what you were saying there. And what was scary was that this was just done privately. It was offered to the Chinese investors privately, and it was not an ounce of it was spoken to people in the local areas, or even just generally in Australia, to give other people the opportunity to tender and make. So that's quite scary, and that would be related to what you're just saying there. This is one story that I saw, and I personally think that in a free economic market, that's what should be done. It should be made public. It should be given the opportunity for anybody to bid, and why should it have been hidden from? And I personally think that the farmers in that area would know what their land is, would know how to graze it. They would know it best. At least it wasn't offered publicly to them. It was very scary. So that basically says that that the Australian government, this free trade agreement, is just basically a one-way street. It's for investors, and they get first priority by the sounds of it. I believe that's probably where this is going. It's where, I don't know if it's in particular Chinese investors, anything that they want, that they get first priority.
Yeah, and there's a number of issues here. Obviously, the ISDS provisions are just terrible. No matter who we sign a deal with, if there's ISDS involved, that's terrible for we the people and for our national sovereignty. And that should just go without saying. Anyone who argues otherwise is either a liar or a fool. There's no other way about it. That's the ISDS provisions. In terms of allowing Chinese or any other group to invest into our real estate, obviously you've got your commercial real estate, your residential real estate, and then things like farmlands, right? Now, the idea that we would make it easier for Chinese investors or for any other country, group of people to invest into our farmland, I think most people can see that there might be a problem with this. I think most people can see that. I wonder how many people can also see that by letting them invest more into our residential real estate market, that's only going to serve to further inflate our prices. And Australian real estate is already incredibly inflated. You know, we're at the point now where it takes two people working to service a mortgage for a house that's anywhere near the city centre where most of the jobs are. We're already at that point now. So the notion that we're going to make it easier for the Chinese to invest into residential real estate here is also concerning. So this Chinese-Australia Free Trade Agreement and some of the things to do with that, they're concerning on a whole number of fronts. ISDS, letting Chinese investors buy up farmland so much easier, further relaxing the FIRB and what they're supposed to do in terms of monitoring these sales, and opening access so that they can further invest into Australian real estate. These are all terrible things. They're all terrible things, and they all got almost no coverage in the mainstream media. Almost none. I mean, how many people if you went and polled the average person on the street in Brisbane and asked them about the Chinese-Australia Free Trade Agreement, how many of them do you think could tell you a single coherent thought?
Not a lot.
No.
Not a lot. And I would kind of think that if they told them about free trade agreement, a lot of people there would probably think, well, wow, great, free trade agreement, means, more investment in Australia, more jobs, or, I've actually heard that from people saying, oh yeah, it creates, there's more money in the system, it'll benefit us, cheaper, certain things will be cheaper, jobs will get created, things like that. Actually, on the contrary, that doesn't really happen at all. Things go up higher. It actually, inflation increases, like you were saying, the real estate market, and a lot of the people that don't understand that that's what mainstream media, that's what controlled literature will tell these people that's the benefits are all this, but on contrary, it doesn't actually happen at all. Like in the contrary, it's the other way around.
Exactly right. And so we've got this issue at the moment where in the United States, they're essentially printing money like it's going out of fashion. Quantitative easing, and as we discussed on last week's episode, we discussed money. Basically, quantitative easing is printing money and chucking it into the system. A lot of the money isn't printed; it's all just digital money that's given to the commercial banks, what have you. The point is, they're just throwing money into the system, which would threaten to devalue their currency. Now, what is a country like China going to do, who depend on their manufacturing base to remain economically wealthy or trying to get wealthier? Well, they're going to have to devalue their currency as well. So what are they going to do? They're going to run their printing presses. Now, what happens with that money? Sure, a lot of it's going to go into the Chinese system and further inflate many of their own markets, but a lot of it's going to go elsewhere. Where's it going to go? To places like Australia. And when they pass things like ChAFTA, they're basically saying, send the hot money here, boys. Send the hot money here, boys. But how is the average Australian supposed to compete with that? I mean, just this week, China was officially named by... let me restart that. Today I read in one of the finance websites that China officially overtook the United States in terms of its gross domestic product. Just this week, right? Wow. We've known that they were coming and this is going to happen eventually, but just this week that's happened. Now, how is a country like Australia of 24 million people supposed to compete with an economy of more than 1 billion people, now the largest in the world, and when their money starts coming here, how's the average Australian supposed to compete with that? They've got no hope. The whole idea of having a national government and national sovereignty is so that we can try to protect ourselves as people through regulations to stop that kind of thing from happening. Otherwise, our country gets bought from underneath our feet. Well, that's what ChAFTA is all about, letting that happen a lot easier. It's as simple as that.
And it's it's like I said, it's the most effective method to basically control a nation economically. You just come in, with the money that's being printed. Well, that's going to happen with China. They just they need to now spend this hot money, and when it comes to Australia, it will. Yeah, it's already happened. It's already happening, and it's just it's affecting the ordinary Australian. And the only real way to get around this is that you need to have honest people who are not afraid to have guns put in their faces and basically go to the government and just say, look, things are going to change. We're going to rehaul this thing, and we just have to change it. Basically, we can't allow this. We can't keep allowing foreign investment to come in without going through our process and making sure that this is going to benefit the Australian people.
Yeah, and the issue is that the vast majority of Australians have no idea about any of what we've just discussed. No. They wouldn't have read any of the articles that I just used as the basis for my intro to that segment. They've got no idea.
No,
you speak to the average person in Brisbane and say, who is Kanye West married to? Kim Kardashian.
Yeah.
Who did Australia just sign a free trade agreement with, allowing them to invest in our real estate, 10 times more than they previously were allowed without FIRB overview?
Not a clue.
Not a clue, mate.
Yeah, I know.
Zero idea. So I think when we talk about what can Australians do, well, they're not going to do anything if they don't know. No. And they're not going to know so long as they rely on the mainstream media.
Yeah.
The problem is the vast majority of them do. That's one of the reasons why we wanted to start this podcast, was to at least provide an outlet so that people who are interested in this stuff can get a different perspective. We've got hundreds of listeners now, and that's fantastic. We've got a few people in the live chat box now. That's great. Ultimately, though, the vast majority of Australians aren't interested in stuff like this. They aren't interested in anything that actually directly affects them. They don't realise how much it affects them. They've got no idea about the monetary system. They've got no idea about anything. No. And that's why the government knows they can get away with passing things like ChAFTA. They know they can get away with it. Simple as that.
Absolutely.